So we're gonna start by talking about the dollar and what I'm looking forward to see in the marketplace. So far as you can see, price has tapped into our key level, our monthly key level right here. This inefficiency. So what we're looking forward to see right now is what the market is gonna do eventually, whether we're gonna keep going to the upside or whether we're gonna go to the downside. Now, whether price is gonna go up or down, nobody actually knows that. All we're doing is participating in the marketplace and trying to see the reaction price is gonna show us at our key levels, and then we take the opportunity to get into the market, trying to follow the trend that the market has presented to us. So now looking at price, I'm just basically trying to remove everything on my charts. Now looking at price from the monthly time frame, what we want to do is basically focus on the trend. We'll try as much as possible not to trade against the trend. And so basically the first thing we'll do is we'll look at the 6 month time frame and then also go to the 12-month time frame as well to see what the 12-month time frame is showing us. So now looking at the 12-month time frame, we can see clearly on the 12-month time frame. Let me remove this. Okay. So on the 12-month time frame, the chart isn't really the clearest, but as you can see, we came into that inefficiency right here. Mitigated the inefficiency the first time, dropped down, created a new low, ran liquidity from the previous low, and then expanded into the inefficiency again. And we have this gap right here. You can see the gap. So you can see the gap clearly, and you can see how nicely price came into that gap, tapped into the gap, expanded higher. So the next thing we'll do, we'll go to the 6 month time frame. So on the 6 month time frame, we can see clearly how price came into that gap. The gap was right here on the 12-month time frame. After an expansion, we drop down. There's another gap right here. Price drops down, filled that gap, expanded higher right here, and broke the previous high. This previous high, you can see price broke that high. And after breaking the high, we're seeing this retracement into an inefficiency right there. So we'll go to 3 month time frame to see. So on the 3 month time frame, we can see clearly that even after price expanded above this key level, we came back to retest on that key level and tapped into that key level. Now, after that tap into the key level, we saw an expansion. Right here within this key level, all we can see is inefficiency and another inefficiency. Now, I'm going to invert my chart for a second so we can look at this from another perspective. So as you can see, we have a low, we have a high. Price created this low right here, created a high, break of structure. This right here was the break of structure. And after this structure got broken, after this low got broken, price came back for a retest, failure to make a lower low, failure to make a higher high, drop down, breaking structure right here. So after this break of structure, what we can do is we can look at where the premium and discount. So this is our, so if we flip this chart to normal, here's the discount, here's the premium. And as you can see, each time price is coming to the discount, it's always presented us with an opportunity to buy. It came in the discount second time, an opportunity to buy. Came into the discount again, an opportunity to buy again, to go to the upside. So now we're in the premium position. Now we're currently in the premium position. So I'm going to invite my chart again to look at this. So let's look at it on the 6-month time frame. So on the 6-month time frame, we mitigated the inefficiency. Also note that there's still a wide range of inefficiency resting right here. All right, 12 months isn't really giving us much information, so we'll just stick to monthly. So on the monthly time frame, so you can see the overall trend is to the upside. So don't be surprised if this key level does not hold to take us to the downside. But if it does take us to the downside, this is where our focus is going to be. If for any reason price drops off that key level, this will be the only place I'll be looking forward to see price come into. Because right here, we have an inefficiency, we mitigated the inefficiency, we drop down this place to the downside, came back again into this inefficiency. So if we reject up this key level, we'll run this lows and come in here. But hopefully, as you can see so far, the overall market structure is bullish on the dollar. The overall market structure is bullish. And if we're looking at the interest rates, you can see that in the interest rates of the dollar is still quite at the upside, around 5.5% or something. So it's not really doing so bad, because if we go to if we go to this trading economics to look at the current interest rates. So this is the interest rate right here. United States interest rates is currently at 5.50. And if you're trying to correlate that with euro is 4.50. And then United Kingdom is 5.25. That is why we're seeing a lot of bullishness against dollar on the GBP US dollar. That's the reason why GBP is the stronger pair to euro. So when you're looking for a buy on GU and EU, GU has more tendency to go to the upside more than EU. So that being said, we'll go back to the chart. So basically, this is all I'm looking forward to see on the dollar. So I'm watching this key level. I'm watching this key level very closely. And so far, we've not really seen any much price action today. So that's why we haven't really had any trades since yesterday, because the market hasn't even moved much. It came in here on Friday, and then on Monday basically had this slight retracement, and then we literally have been in the same position since Monday. So even if we were in any position, we're still going to be in it anyway, and it's not going to be in profit, and it's most likely going to be in a loss. Because if you had bought euro or sold euro, you wouldn't be in any profit. But whether you're buying it or selling it, there isn't really much profit so far to be made in such trades. So that is why we're being patient, waiting to see what price is going to do right here, because we're already creating a structure right here, a high, a low. So we want to see if price is going to create another high and then a break of structure. Then we'll potentially look for a trade. But if not, rally above this high and then a retest, then it continues to the upside. So that is basically what we're watching on the dollar. And we're going to look at the euro as well and see what the euro is doing. So for the euro, so you can see our key level on the monthly our key level on the monthly, the inefficiency resting right here. You can see that price has tapped into it a little bit, but I'm not really satisfied with the tap. I still want more push into that key level. I still want price to still go a little bit more deeper into the key level before we now start looking for any sort of confirmation. And so far, you can see right here, we created a low, a high, ran liquidity in here, mitigated the inefficiency. And then after that, we came back down very close to the previous low that was created right here. But as you can see, what price is currently doing right now. So you can see that basically a high, a low, and it's broken structure within the range. So this break of structure right here can actually present also the trade, in as much as I don't really like trading this kind of setups because it's kind of like trading within a range of another range, because we're in this range low and range high, and we're trying to see if price is going to go deeper into this key level, and now trying to buy it from there, in as much as it can still yield us some profit, but we're still, it's actually going to be a very high risk trade, because this liquidity right here could be the next hunt. It could be the next thing price is hunting for. Because if you're looking at this previous high right here, you can see a low, a high, failure to create a lower low, failure to create a higher high, and then a drop, break of structure right there. So right here, we'll have a break of structure. So I wouldn't really be surprised to see price want to come back into this key level. So even if I want to take a trade from here, even if I want to take a trade from this position, it will be for price to come in here and close. That will basically be the trade. So entry probably around here. Stop loss this low. M for 1:1. And that'll be it. Because I can't, if I'm trading this, I'm not going to try to capture anything that is more than 1:1, because you never can tell. Price can come in here and reject and run down and run all these lows. So that's basically all I'm seeing right now. For me personally, I'm just going to be on the sidelines for Euro US dollar. I'm not really going to trade anything yet until I want to see this low get swept, or potentially we take this high, because for me to engage, I want to see a 15-minute shift to market structure. And so far, I'm not really seeing any significant shift to market structure yet. Even though this high looks like a shift in market structure, but I'm not confident in trying to buy from seeing just this. It's not really enough for me. So that is what I'm watching. And in the next live stream, we're going to dive deeper and talk about other pairs. And we're going to look at what GBP US dollar is doing, and also look at gold as well. And potentially, we also look at GJ, what GJ is doing, and what we could potentially do with GJ's price action. So I appreciate you all for tuning in, and I'll talk to you in the next live stream.